This is your LMAX exchange technical update for Monday, March 20th, 2017. Euro dollar. So the euro continues to show signs of the formation of an inverse head and shoulders formation on the daily chart, with the market breaking up, clearing some key resistance the other week above 106.80, and now focused on a retest of the neckline, which comes in at 108.75. A break above 108.75 would trigger the formation and open the door for fresh upside towards a measured move objective up into the 114 area over the coming days and weeks. So clearly, again, there is potential signs of the formation of a major base in the euro right now, and although we haven't seen confirmation of this formation, the market continues to push higher and is looking to retest that 108.75 December peak. Any setbacks right now should be very well supported ahead of 106, with only a break back below the recent lows that we saw down around 104.95 to negate the current constructive outlook for euro dollar. Sterling dollar. So cable has seen a very nice bounce over the past several sessions after the market stalled out ahead of 120, and now the market is coming into some key resistance in the 125 area. If you look back to levels that we had seen into the February, mostly through February, a lot of congestion in that zone there into the 125 area, and so that level now acts as a good previous support now to resistance area, which should favor the formation of a lower top and fresh downside extension, while the overall trend here continues to be bearish. Only a break ultimately back above 127.75, the December 2016 peak, would force a shift in the structure. Dollar yen. So dollar yen is broken down after stalling yet again above 115. That key high in place at 115.62 would need to be broken to negate the current bearish outlook, and instead we still see this bearish consolidation potentially ahead of the next major downside extension below the recent range lows around 1160. A break below 1160 would open the door for a measured move downside extension towards the 107.60 area. Of course, we do have also in that area the 200-day moving average, which sits right now currently around 108. Only back above 115.60, that high that we saw back on the 19th of January, would force a shift in this current bearish outlook for dollar yen. Euro Swiss. So Euro Swiss hasn't really done much over the past several weeks, but overall the pressure does remain on the downside, and this is a market that continues to be very well capped on rallies, most recently above 108. This leaves the door open for the possibility of fresh downside over the coming days below that 2016 low at 106.24, which would expose a downside extension towards the next key psychological barrier at 105 further down. Only back above 108 on a close basis would really take the pressure off the downside. Aussie dollar. So Aussie continues to surge, with this market breaking back towards and looking like it wants to take out the recent highs that we saw in 2017 from the other week, from actually mid-February up at around 77.40. A break above that level will expose more significant resistance at 77.79. That's the high going back to November of 2016 further up. Overall, there's a lot of strong medium-term resistance in the Australian dollar up against the US dollar up towards 78, and so the market could very well be capped once again despite a break above the recent highs if we see the market establish above 77.40. So watch out for this key resistance at 78 to hold in favor of a topside failure and fresh downside back towards recent lows, which come in all the way down around 74.92. A break below 74.92 would confirm this topish outlook and accelerate declines back towards the 70 psychological barrier over the coming days and weeks. So again, right now 78 is the key level to watch above. Only the establishment above that level on a daily close basis would force a more significant shift in the structure, a bullish shift, while inability to do so will suggest that the market is going to continue to stall out up towards 78 in favor of a resumption of declines. Dollar CAD. So dollar CAD has continued to extend setbacks, is looking to extend setbacks following last week's sharp declines. A breakback below the recent low that we saw at 32.77 will accelerate declines and open the door for deeper setbacks towards 130 again. But ultimately, overall here, the overall outlook is constructive, and any setback should be very well supported ahead of 130 in favor of an upside extension back towards a retest of the recent multi-day peak up towards 136. Kiwi dollar. So Kiwi is in the process of correcting out from recent lows, with the market now trading back up towards some key previous support, now turn resistance in the 71 to 72 area. Ideally, this market looks for a lower top now as it continues to show signs of topping out off the 2017 high, and even before that, the 2016 peak ahead of 75. And so again, lower tops are favored in favor of fresh downside extension back below the recent lows and down through medium-term support at 68.62. Only a close back above 72 would delay but not negate the bearish outlook. SPX 500. The S&P 500 is consolidating off recent record highs, though this consolidation is still classified as a bullish consolidation while the market holds above 2350 on a close basis. If we do see a break back below 2350 on a close below 2350, this will be what is required to force a shift in the outlook and take the immediate pressure off the top side. But until then, this is again a bullish consolidation favoring potential for fresh upside beyond the recent record high at just over 2400 and towards the 2450 to 2500 area further up. Gold. So gold continues to be very well supported on dips. Most recently, this latest setbacks was supported just under 1200, and a higher low is now sought out around 1195 in favor of that next major upside extension to be confirmed on a break above 1264, exposing a move well above 1300 over the coming days. Ultimately, only back below 1180 would compromise the constructive outlook for gold.